What's up guys, everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but briefly before I get into the technical analysis, I'm going to bring up an image here that displays a number of points that not only just point to a bullish case over the medium term, but a very intensely bullish case, especially if all of them do come to fruition in the specific ways in which would orient the conclusion here towards the highest degree of bullishness, obviously being both within the fundamental landscape and also the technical reality of the charts themselves. But we look at these points here, thinking about these potential developments, some of them coming to fruition already, some more certain than others, some of them have yet to come to fruition, such as the Clarity Act being passed, although we will probably know the answer to that likely by the end of this year, perhaps going into early next year. I'd have to imagine no later than Q1 of 2026. But if we're looking at all of these points here, we're looking at a scenario really in which the U.S. government will be issuing these $2,000 payments for the stimulus mentioned by Trump associated with the tariff revenue and the money brought in because of that. Now, there's various things I could say about that aren't necessarily the best, just about a lot of the times when we see things like stimulus checks having some sort of relation in cases to involuntary taxation. Obviously, with the tariffs, we've seen some degree of increase in our spending in America. So we've been spending more money over a period of time. It's almost as if all the money that we've spent extra due to the tariffs is just kind of being reimbursed in a way. But in general, the injection of this liquidity is typically a good thing, especially if we go back and think about to March of 2020, or just around the period of time in which the pandemic was happening and the stimulus checks were put into place for that. We're also seeing the federal shutdown, the government being halted, resolved. That is no longer going to be a thing going into the near future. The Federal Reserve also bringing quantitative tightening to an end, which I mentioned in the last video, and interest rates beginning to move down with the FOMC meetings bringing down the rates in the last two instances going back to September. Now, at the same time, we would see the Treasury begin to actively add liquidity into the financial system, offsetting the prior drains, because what's also interesting is during the entire bull run of going back to the end of 2022 up until now, we had been in a state of quantitative tightening, yet a bull run has happened the entire time, and we've seen a muted alt season. So perhaps, again, all of these points that we see here with emphasis on the ending of quantitative tightening, potentially within the next 3 to 6 months moving into actual quantitative easing, we might actually see the alt season become unmuted, and we'll actually begin to see that parabolic portion of alt season that everybody has been at this point very patiently, basically impatiently and begrudgingly waiting to occur. This is also going to increase the supply of dollar liquidity obviously available to the capital markets. When we start to see these things happen in this form of configuration, we'll see the liquidity conditions shift from being contractionary into an expansionary sentiment. Typically, this is going to be associated with the early stages of renewed economic and asset market growth cycles. If in parallel to this case, as we're seeing, as I mentioned, the Clarity Act earlier, the legislative clarity coming around surrounding these digital assets, Bitcoin, various viable actual altcoins that have utility, are going to see this regulation begin to pass. We'll see likely within the next year or so, maybe less. I would definitely say within the next 5 years, we'll start to see these major asset managers, perhaps such as those who already have Bitcoin spot ETFs, begin to issue new spot-based exchange-traded products, tracking a wider array of cryptocurrencies, just not only Bitcoin, extending to things potentially like Cardano or XRP or whatever else may be chosen. And this would also contribute to an effect of lowering the regulatory uncertainty. It'll expand institutional access and potentially channel newly, and not even really potentially, likely almost absolutely would channel newly available liquidity into the crypto sector. The underlying implication of all this really is macroeconomic policy, um, things like fiscal action, regulatory developments, all this converging to create a structure more accommodating for these risk assets, specifically crypto and various other things as well, but here obviously for crypto specifically. Although, to keep in mind, as I said, a lot of this and the degree with which we could see this bullishness propagate going into the next 3 to 6 months, how intensely bullish this may or may not be is dependent upon the liquidity coming into play. $2,000 stimulus checks aren't completely set into stone just yet. The Clarity Act, like I mentioned already, hasn't been passed. A few of these points here are tentative, but some of them are more concrete. But if we see over, as I've been saying here, within the next and over the next 3 to 6 months, going into Q1 of 2026, we start to see all of these points checked off as completely coming to fruition in a positive manner, and we see all of this happen, then this would then start to, especially if quantitative easing actually ends up beginning sooner, relatively sooner rather than later, then we could very reasonably expect Bitcoin to continue to go higher, and likely this is going to line up with, as I alluded to earlier briefly, the parabolic portion of alt season. At this point, it's been muted, very much so for the vast majority of the altcoin space. But that aside, that's giving a fundamental landscape, a primer in that regard. Here's what we now see on the technical charts. First, with the 12-hour chart. First thing I want to point out here is the trend-based Fibonacci extension I've been going over the last few videos on this chart. Here, the 382, the horizontal support that's been intact since going all the way back to first week of May earlier this year. Again, we're seeing the 12-hour chart come down to the 800 EMA, as I've gone over plenty of times. This has been a historical support going back to the early stages of the current bull run for Bitcoin. So we're seeing key support structures holding up currently. If we see here the price, there's clearly a downtrend that is in play here, which if we, let's say Bitcoin's bottomed out here and we see it continue to go higher, getting back above the 50 EMA band is going to be crucial, but more importantly, the 200 EMA, which is basically synonymous with the 0.5. So this is going to be basically $111,000 almost on the dot. Afterwards, this zone here of resistance horizontally will be important, really going all the way back across this period of time, which is going to be pertaining to getting back above around 116,000. Afterwards, you got the 618 here down 120,000. I would say $120,000 is kind of that psychological value. If we start to see Bitcoin steadily climb up here through these resistance levels, finding support, moving back above the 618, and eventually back above the prior all-time high here to around 126,000. We could reasonably expect moving up to $130,000 or so and higher. Look here at this daily chart. We'll notice that there could potentially be a falling wedge forming here. The price target for this would just be approximately the prior all-time highs, so let's just say somewhere around 122 upwards towards 130,000, somewhere just around that range, retesting prior all-time highs, and to some degree going a little bit higher. Again, we're seeing a horizontal range here that's been very important since going all the way back to mid-December 2024, initially setting this double top resistance. We've seen this yellow zone here act as a crucial junction for price resistance, now currently being flipped into support. So if we think about the Bitcoin fear and greed, which is sitting at 26 right now, so it's just a value a point above extreme fear. Bitcoin's been in states of fear, extreme fear, getting out of it for brief periods of time since the record-setting liquidity flush event going all the way back here to around the first week of October. Since then, the market's been very panicked, albeit understandably so. Yet we're seeing, as really what the main point of the last video was, is we're seeing plenty of key structures being held here, not being invalidated just yet, although things could very quickly change, especially if we lose the support here of the potential falling wedge somewhere around approximately $95,000, $96,000, given when this gets tested again, if it gets tested again. But as I said, and I'll mention it here as I lead into the higher time frames, this horizontal level here, approximately $75,000 or so, a range of around 75 to 80,000. If that, we see Bitcoin start to fall down to this horizontal zone, eventually lose this. This is, I think, not just my own personal final line in the sand, but really just objectively speaking, as unbiased as possible. In the technical context, this quite literally is the final line in the sand. Losing this would set, here as I move into the 2-day chart, a macro lower low going below the horizontal support here. You can see each of these horizontal supports throughout the entire bull run thus far have held as we've continued to see Bitcoin just stair step higher and higher here. So that would then break that structure going all the way back to the end of 2022. Here on this bi-daily chart, I went over it in a few videos ago, but I want to point this out again where we can see each of these orange zones here depicted by these vertical dotted orange lines predominantly are pointing out something here on this bottommost indicator, the RVI here for each of these zones, where we can see on the price Bitcoin's testing its uptrend for the current bull run that's been intact since end of 2022, the beginning of the bull run. And in tandem with that, we can see the RVI getting into these oversold territories anywhere below or just around or below 2025 for each of these occasions. And then again, further in parallel with that, we see the RSI here, this upper indicator, getting at or below the 38.2 level for each of these occasions, for these mainly these 5 here. But this one here is a minor exception. Didn't quite get down to 38.2, but it did test here back in around mid-March of 2023 the uptrend for the current bull run. And so we're seeing all of these confluences. We're seeing plenty of things lining up. Is it getting a bit scary? Are the limits being pushed? Is Bitcoin walking a tightrope? Yes, but also at the same time, no, because the fundamental landscape looks fantastic. It's getting better. There's plenty of things to be very, very positive about and hopeful for going over and into a medium term around 3 to 6 months. Looking here at the technical aspect of that, it just appears to even scream louder and louder that more likely than not, Bitcoin's going to go higher rather than begin the next bear market. Again, we're seeing the 200 EMA hold up here with the last weekly close, which is going to be even more important as I go to the higher time frames. But here on this 2-day chart, it's going to be very important to get above this yellow zone, which was here support. At this point, it's either going to flip into some form of resistance, Bitcoin's going to go lower, or it will eventually, or it could perhaps do something like this and see temporary resistance and go sideways and then break it. But ultimately, either we're going to see a break above this or further break downwards. This is generally confluential with the 50 EMA band on this time frame. So the upper boundary of that's going to be approximately 112.2 thousand. As I mentioned on a lower time frame, the around $111,000, the range of around 110, 111, 112, 113 or so. That's going to be very important for the first range to get above, and then getting past around 116, 117,000, and then ultimately 120,000 will be very crucial going over into the next few weeks, end of November, going into December, finishing out this Q4, which at this point is starting out very atypical to past history. Typically, Q4 is the most bullish portions of the year, the most bullish set of months, and at this point it is doing the opposite of that. Since October, Bitcoin is down approximately 22%. So again, like I said, it's very atypical, but in my personal view, my stance is that this is something that's being manipulated, could be a word to use. I'm not necessarily pointing fingers anywhere, but I think that we're seeing some fluctuations in the market that are differing with past history, such as really this entire bull run with its gradual, it's methodic, it's more measured and elegant stair stepping. It's just not a one pump and done. For example, like here going into 2021 and the prior bull market going back to 2016 and 17, we're seeing a lot of very different things for very reasonable reasons with institutional adoption and interest, nation state adoption and interest. We're just seeing the maturation of Bitcoin as an asset itself, cryptocurrency abroad. We're seeing the maturation of that and the more widespread adoption and acceptance and recognition of what it is and what it stands for as a revolutionary technology, that being blockchain solutions. And so I think that what we're seeing here in Q4 of 2025 is a going against the grain, going against the previously set precedents of patterns, so as to freak the market out, specifically like retail, small money, dumb money, whatever you want to call it. So the people at the top of the pyramid, the people with all the influence and the power, these institutions, so on and so forth, the big money can get in at lower prices, shaking out most of the market, and then all just to bring it up back to prior all-time highs, and likely pretty significantly higher than that if I had to say. And here on the weekly, we're still respecting the 50 EMA band here. It's been support. It acted as the flip of resistance and support here for the beginning of the bull run leading into October of 2023. Ever since then, we've seen Bitcoin's just been off to the races here, although since then we can see this first major impulse, and then this point's been kind of tapering off a bit. But at this point, still, we're seeing these key structures hold. No weekly candle close below the 50 EMA itself, and neither, obviously, so we've seen the price go below the lower bound of the 50 EMA band. That's approximately 95,000. I think it could potentially go down to around 95,000, maybe even a little bit lower to around 90,000 approximately. I think that that would be absolute maximum pain without bringing it down to around 80 to 75,000. Like I've mentioned, the worst case scenarios is that we see this M pattern shape up, it retests the horizontal support, literally pushing things to the absolute limit, and then still find a bounce there to the upside. But the closer and closer we get to this horizontal support, the more and more, for example, like myself, are going to begin to lean towards the idea that this is more likely than not going to lose this horizontal support. But on the flip side, it totally just could be an event or scenario of maximum pain, so as to shake out most people as possible. If we do actually end up seeing that, that would be a drop of around 35-36%. So it'd be a pretty sizable drop. I think it would actually be the biggest one so far, maybe not bigger than this one. It would be. So this would be, if that does end up happening, it would be the most significant percentage drawdown of the current bull run. But for now, with the current bullish structures being held, specifically this 50 EMA band, it's not particularly any reason to think that that's more likely than not, but it's definitely possible. Now, if we look here at the weekly RSI, we can see that the RSI has finally reached the upper portion here of the horizontal zone that has been intact since the earliest moments of the current bull run here. And it's basically just as oversold as these last two instances, which go back all the way to the low of around 50,000, the second to last time the price was hitting the 50 EMA band. So again, there's just plenty of patterns popping up, plenty of structures still being held. It just doesn't particularly make more sense of a bearish scenario. If you look here at this weekly chart, we see the 50 SMA, as I went over this in the last video. This is going to be very important. The last week candle did not close below this. We've seen some wicks below it, but we also saw that back here during April 2025, and very briefly, to a very small degree, back to August, September of 2024. If we see a weekly candle close below this, then this is going to be the first thing before actually losing this horizontal support here at around approximately $80,000 or so. This will be the first thing, losing the 50 SMA on the weekly. That will begin to push me towards the idea that the bear market could be the more likely scenario rather than a final continuation of the current bull run. But until this happens, it's not particularly too much reason to worry with 4 days, 22 hours left in the current weekly candle. I think that this is going to be a very important week. I mean, generally I've been saying that November, with how October's shaping up, or it shaped up, if we look at the points I mentioned earlier in the fundamental landscape, this month is going to be very important. Is November going to stall out and not meet past historical precedents like October of this year did, being a bearish month going against the grain and pattern of history? If so, then this could potentially just be pointing to just how tapped out this current bull run is, to the point of it no longer even being notably bullish within Q4 of a given year. Q4 in general, like I've been saying, historically is great for Bitcoin, but I mean, even within going all the way back to, if we look here at the end of 2022, the bear market bottomed out. Very, very late 2022, early 2023 is when the bull run began here. Then going into October here, November 2023, Bitcoin then ran from 25,000 up to around 73,000. Fast forward here to October, November 2024 here, Bitcoin ran from around 50,000 up to 108,000. So Q4 has also been quite notable for bullishness within the current bull run, not just going back in past history, all-time history for Bitcoin. One of the things I mentioned on this chart in the last video is the 12 and 24 SMA, the blue purple SMA here. I think I might have to zoom in really far to see it. So we actually, now the current weekly candle still has some time to close, but we can see here currently, well, that just looks like a straight line. I thought I could draw a circle around it, but we can see here that the 12, the blue, has gone below the 24, the purple SMA. And what I mentioned in the last video was that every time this has happened, for example here, March of 2025, Bitcoin bottomed out locally in the bull run. If we look here, going back into August of 2024, there was still some brief downside afterwards, but as soon as this cross happened here, we saw the wick down to the wick low here. So for all intents and purposes, it identified the bottoming out of Bitcoin. And then here, lastly, September 2023, this happened shortly after the low was set here. So every time this has happened in the current bull run, this has identified a local low that led into a continued uptrend, another impulse afterwards. So either we're going to see history repeat here and rhyme with itself, or as I zoom back in here, we're going to see, as we've already seen this cross here happen, we'll see the weekly candles close with the 50 SMA. And then there's two scenarios here. Either the bull run is over, or we're going to see, at worst case scenario, horizontal support here, not resistance, tested at approximately 80.5 thousand here on this weekly chart. A close below around 80.5 thousand will not be good, according to the weekly. So those are really the two scenarios. Either this is identifying a local low, or this is going to be the beginning of seeing the 12 and the 24 go below the 50 SMA. We see the weekly close below the 50 SMA. Horizontal resistance is tested here, support's not found, and then this here just confirms the bear market. Very simple. Either we're going to see these things happen favoring the bullish case over the bearish case, as I described. Again here, plenty of bullish, or rather not, these are bullish indicators, but these signals have not happened yet. The pi cycle, the RVI indicator here that I've been going over, I went more in depth over in past videos, but generally here, the two peaks, as I mentioned, have always happened, going all the way back to 2011. This is yet to happen. Same thing could be said here for the accumulation distribution of the open interest money flow index. We've yet to see this call the all-time high. The 30 indicators on CoinGlass, none of them have signaled an all-time high yet. Again here, the monthly chart for the Bollinger Bands. I've went over this a lot recently. This is one of the biggest things lending me towards a bullish bias, because we have yet to see the depressurization event. That's when the Bollinger Bands here diverge intensely towards the downside. Every time this happens, you can see here that this lines up with here, 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 and here, the most parabolic portions of a Bitcoin bull run. We have yet to see the depressurization event. We've yet to see this intense divergence. And despite Bollinger Bands being an ambiguous indicator, meaning that it could go up or down, the broader context and history of the asset we're looking at, that being Bitcoin, points to a more likely than not scenario of the upside rather than the downside. And if we look here at the Bollinger Bands, they're currently compressed to the value of 89.27. That is the most compressed the monthly Bollinger Bands have ever been. Here on this monthly chart, to update the SMAs here, again, we see the 12 and the 24. I've mentioned various SMAs, EMAs ranging from the 12-hour, the daily, upward towards the weeklies. Now we're on the monthlies, and a lot of them have been the same, or we'll see a SMA on a lower time frame, and then we'll see a different SMA on a higher time frame, essentially act as the same moving average due to their behavior and characteristics across varying time frames. But the end all be all, the alpha and omega here is the 12 SMA here on the monthly, because this is the highest time frame chart that I will go over before getting to the yearly. We can see that this here has held up the entire bull run, similar to the 50 SMA gone over earlier on the weekly. And this is again why November is going to be a very crucial month. We have 18 days, 22 hours left. The 12 SMA sits at a $101,635,000. So if we see a monthly close below this, that means we'll see weekly closes below the 50 SMA, more likely than not, I believe. Let me check that just to be sure. Yeah, so if we see the monthly here close below the 12 SMA, then we will see the weekly SMAs, key SMAs lost. We'll see the daily, the 200 EMA on the daily, the 800 EMA on the 12-hour. We'll start to see a lot of these bullish structures being broken, potentially invalidated, if we eventually test this horizontal support here and lose this with resistance towards the downside into a new bear market. But until this happens, there's no reason to significantly entertain the fact that the bear market has begun. It's still really, at this point, I think it's probably just about as 50-50, totally uncertain as it's been throughout the current bull run. As ambiguous as this bull run has been, nobody really knows what to think at this point anymore. But you have people making their bets towards the upside, you have people making their bets towards the downside, and if I'm trying to be, which I try to be in every video, as objective and unbiased as possible, it does appear to be that the bullish case is stronger when you, especially so looking at the fundamental landscape and the technical landscape and everything I've gone over in this video. So again, just to say it, 101.64 thousand. If the monthly closes below this, then this could very likely be either, in scenario A, spelling disaster into a new bear market, scenario B, spelling max pain down to horizontal support and then to a further bounce towards the upside, or it'll be a brief fake out and then a quick recovery towards the upside. Those are three good scenarios to kind of paint a broad picture of what could potentially be happening as we lead into the end of this year, into 2026. And then lastly, as always, we have the 12 monthly chart here. I'm not really going to say anything else here because I go over it so often, but really just to summarize everything gone over thus far, we have a phenomenal fundamental landscape that appears to be only getting better and better. We have plenty of technical reason to think that Bitcoin is not really reflecting, if we think about the fear and greed index and how much fear there is in the market, you would think that Bitcoin would be positioned way worse than it actually is, but it's actually positioned quite well despite that. So to me, it appears to be the case that what we're seeing is the Bitcoin is sitting at all-time highs, roughly as a range. It's sitting in price discovery. The fundamental landscape is getting better and better. Plenty of bullish structures are still intact technically. To me, as I said earlier, it just seems like the retail, small money, the dumb money, the less important people of those who play the game of the market are being driven into a state of panic, of fear, and caused to leave their positions, whether they do that volitionally, or if they got liquidated in the last liquidity flush. Appears to be that this is being done, if you want to use the term manipulated, by all means, perhaps that is the best word to use, but it seems as if something is going on to scare the little players out of the game, so the bigger players, that big money, has their hands in everything, can get in at lower prices one last time, below $100,000 that is, with the wicks down to 98,000, all to then send things significantly higher, likely towards at least 150,000, probably close to 200,000, and a little bit higher than that. But that was all that I wanted to go over in this video. So as always, and this is meant to be financial advice, but all that being said, and all else gone over, I hope you all enjoyed, and I hope you all have a wonderful day.